Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is up about 0.2% there on the S&P Nasdaq 1.2%. Semiconductor made a move 2.5% today. Dow red, Russell 2000 flat, transport same. Banks down about 1%. Energy's up. Biotech made a move 2.6%. Healthcare up a little bit. Looks like home builders and utilities and retail. These guys are red about 1.5% or so. Emerging market up a little bit. Bitcoin up. Gold, silver miners. These guys got continue to get hammered today. Dollar up slightly. Oil down. Treasury bond up. VIX is down about 5% there. Let's do the S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed yesterday, and it looks like we actually gapped up today right here. So you can see this is where it closed, this is where it opened, made a move on that right at open after seeing that gap up. However, that micro-term moving average has been supporting the bears very aggressively in the last couple weeks here, and you can see that we hit that micro-term moving average at open or slightly afterwards, and that's a level coinciding with the gap resistance. Not to mention we got that horizontal pivot in that vicinity. You can see the prior support acting as new resistance, right? So we got kind of a triple resistance in that vicinity at 4 or 5. Right, prior support, the micro-term moving average that's been supporting the bears, and then the gap area. So quickly, despite the fact that we did see that gap up, and it made a lot of buyers very hopeful this morning, well, that dream has shattered very quickly, and that's been the story this entire year. And you can see there's that poopy candle there. In the second hour, pretty much came down, filled that entire gap very quickly. And third hour, bears trying to push it a little more. But it looks like we found a little bit of micro-term support in that vicinity. A little bit of courage there from the buyers on that fourth hour. But again, that micro-term moving average is just too strong. You can't even get above the micro-term moving average when bulls are trying to put up that courage to push up. And you can see on the 5th hour and the 6th hour, pretty much not able to get above that level. And that's kind of how we closed the day today. A little bit of move, but not able to sustain anything. There's no traction. Bulls fumbled the ball after the gap up, was not able to keep the gap open and start attacking the down gap here. And looks like bulls are really scared, and bears are really dominating this game, especially in the last several weeks. So what we can expect going to next, tomorrow, possibly remainder of this week. Obviously, we want to continue to give benefit of the doubt to the bears in the micro term and the short term and the mid-term, because we've been in this structural bearish sentiment, which I talked about yesterday, in the mid-term. However, in the long term and the primary, we still want to give benefit of the doubt to the buyers. Hopefully you guys understand what I mean by long-term and primary versus mid-term, short-term, micro-term. Anyway, but if you're a buyer here and you're desperately seeking this market to make a move, of first things first, that micro-term moving average had to be reclaimed and reprogrammed so that possibly that micro-term could, support the buyers. But even last couple times when that, micro-term seemed like it was supporting the buyers here, you see how quickly things got out of hand. So I think at this point, there's so much that bulls need to do. And I talked about this yesterday's video, that because of the overall structure in this price action that we've seen last couple months, it's going to take more than just 1 day or 2 days, maybe even a week of price action. It's going to take probably a month or so before we can see a real reversal back to the upside. If you've been struggling and extremely painful for you in the last several months, unless, and this is what we talked about, unless there's some crazy V-shaped reversal, which this market has shown that it's capable of doing since 2017 and 18. So even 2020, with the COVID lows, this market did see the V-shaped reversal, which nobody thought that was possible. So what I'm saying is, unless we see some crazy, man, like V-shaped reversal type of move, if you're a buyer here, really going to need long process of constructing some sort of a top bottoming, reversing pattern. You see what I'm saying? Until we see that benefit of the Dow continues to go to the seller. So check out that oscillator, see if you can extract any more information. So, I mean, these bullish divergence been failing very abruptly. I don't think, I mean, we've seen some bullish divergence that playing out for a day or two, but we haven't seen it where that bullish divergence actually making into an actual reversal pattern. We've seen that a lot last year, even like during, all year 2021, we see bullish divergence, market reverses back up, and we've been riding that the entire year of 2021, even 2020, after COVID lows. Some of these bullish divergence was a key role before the market gets right back up. However, this year, just the amount of the pressure that we've seen from the sellers, these bullish divergence give us some sort of move, some sort of like early jump for like a day or two, but you just can't find traction. Remember, we saw that, sometimes here, like here, actually, there was a pretty good bullish divergence right here. Market did make a move about 2 weeks. And then we had bullish divergence here, which we did see 2 days of move. But remember, my midterm moving average was right in that vicinity and brought this down because, again, this market has been in this kind of overall downtrending sentiment and how quickly. And then we saw another bullish divergence right here. You can see right there. And we did see about a day of move, and that got failed. And then we saw another secondary bullish divergence right here. We saw 2-3 days of move. And then remember, we talked about that oscillator need to go all the way to the top of his band. It didn't do that. You can see there's a space there, came right back. And now we have another, because that oscillator is cultivating higher lows for some reason, while the price action is cultivating lower. Definitely a bullish divergence. Would this be some sort of a potentially like mega V-shaped reversal type of signal? I don't know. As of today, it's tough to say. If bulls really want to put some fear for the bears, I think best case scenario, maybe tomorrow or sometime, gapping up above it. You see it's too much. 3% gap, but we're not going to see it. So I think best case scenario is maybe kind of bring up the price a little bit tomorrow, couple days, and then get to that gap area. That would be the best strategy for the buyers. Get to that gap area at 4405 and then gap it over, which is a 1.5% gap up, which is doable. Turn this into an island bottom and then go after filling this gap. And then hopefully in that process, this thing goes all the way to the top. So if we can have, and this will be this probably the only way bulls can try to find some kind of traction, because I think at this point, bullish divergence itself is not gonna be enough. They need more help from the price action. So I think with the island bottom reversal, when I say island, I mean, you see there's a down gap right here and gapping it above that down gap, turning this into an island, and then make a move and have a strong bullish move with that bullish divergence. I think if we can do that, I think bulls can manage to at least to get up to 424, retest that midterm moving average. But again, this is a potential scenario. Let's see how it plays out. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good trading tomorrow.